My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people want to make friends. I'm just trying to make you some money. Because my job is not just to entertain you, but to educate and teach. So call me at 1-800-743-CBC or tweet me at Jim Cramer. Nothing is more exciting than the catch-up trade, which is what drove today's terrific action. Dow surging 461 points, S&P gaining 1.2%, Nasdaq advancing 1.13%. In fact, the S&P is now up for 2020, including a 47.5% gain from the March lows. I'm repeating that. A 47.5% gain from the March lows. Oh, the airlines, aren't they amazing? They just won't quit. Same goes for the cruise lines, the hotels. How about earnings? Who needs earnings? And bother me later. The casinos are on fire. Who can resist now that they're open again? Oil's roaring. The price of crude up 75 from that bizarre bargain. Take some waiting, will you? I mean, this is a V-shaped recovery like this. Then there's Boeing, which is up more than 150% from its lows in March, including a 12% move today, making it the biggest winner in the Dow and its best month ever. Now, just can you imagine, you and me for a second, can you imagine if they actually got some orders? It all makes sense. Even after this run, all these recovery stocks are low. So they're off the highs. And that's why it's easy to see why they're so irresistible, especially since we have absolutely no earnings on our faces here. And one could any earnings could spoil the party, but there are none. That said, the recovery rally, as exciting as it is, and I know it's exciting. I watch it. I see the guys on Twitter. I mean, there's some people having the time of their lives, and I love that. I love that, the lampshade on their head thing. Okay, but that's not what's responsible for the historic run in the tech-heavy Nasdaq, which just hit a new all-time high today. Yeah, all-time high. It's very different from the airline stocks or the oils that are bouncing, or the department stores, or the cruise lines, or a bankrupt rental car company. I bring up the phenomenal move in the Nasdaq because I think it's more representative of this market than the endless rebound in the hospitality and travel stocks in response to the reopening of America. So why don't we go through some of the biggest winners so you can understand why? These are the stocks that have powered us higher. And first, nothing like it, Apple. It's up 13% for the year. What happened here? I hate to say I told you so, but in the middle of March, when analysts were once again fretting that Apple's best years were behind it, I told you to stick with the stock because of the bountiful service revenue stream. I said, repeat after me, own it, don't trade it. Once again, I was excoriated by the mountebanks, the knaves, the fools who love to hate Apple, even as they pretend affection. Posers! When people who are stuck at home with nothing to do, they go online, the Amazon, the Apple stores. According to Morgan Stanley's Katie Huberty, who has her finger on the pulse of this company like nobody else, Apple's service revenue has seen a dramatic spike. Plus, in an era where we're afraid to touch cash or hand over our credit cards or type on a potentially COVID-encrusted keypad, shedder, Apple's Pay's contactless technology has become a necessity. Honestly, don't you? I carry Puro with me. And then I start carrying my Apple Pay. Best of all, the work-from-home movement forced a lot of information technology departments to start supporting Apple's computers because that's why many people have it home. People have Apple at home. They like Apple. They're stuck with the other guy. It's at work, right? Apple has a great phone, and the laptop is good for Zooming. But with a few notable exceptions, they've been locked out of the enterprise for years, and that's now over. Second, Mrs. Softy. That's right, Microsoft, which also benefits from the rise of remote work, although not as much as Apple. Microsoft's Azure cloud business has been a standout in a period where the cloud is the only way for most people to operate. Everybody's moving to the cloud. They've had a remarkable run, thanks in part to management's flawless execution. CEO Satya Nadella talked about how the pandemic has given us multiple years of digitization in the span of a couple of months. No wonder Microsoft's a winner. Third place, shocker, Amazon. All right, now, we're starting to hear about $3,000 price targets for this $2,500 stock. I find that plausible if not totally conservative. Amazon Web Services is the #1 cloud infrastructure play around, and while it's not growing like it used to on a percentage basis, that's the law of large numbers. Even more important, Amazon's the undisputed king of the stay-at-home economy, and once you're hooked on Amazon, it's very hard to go back to the mall, even as the mall stores and REITs are rebounding from oblivion. It's part of the trade I keep telling you about. That's like the, I don't know, renaissance. After every storm, after every flood, after every blizzard, Amazon has picked up new users. I think the pandemic's probably the greatest single driver of traffic in history. Don't forget to leave your boxes out for 24 hours to prevent COVID-19 from getting into your house. That wives' tale, I think, is actually something that I do. I don't know. Number 4 might surprise you. Facebook. Facebook. Now, how did that happen? That hated company, Facebook. Maybe it's not hated anymore. It's all about orientation. You see, Facebook's gone from a company pummeled by the media to a company that's beloved by small and medium-sized businesses, especially now that they're rolling out Facebook shops to facilitate e-commerce. I think the company has learned a lot, though they still don't know how to deflect like I think they should, because CEO Mark Zuckerberg has to pay more attention to his business customers. That's what you focus on. If I were him, I'd use this moment to roll out a $100 million grant program for minority-owned businesses, which often operate in areas with suboptimal internet access and have been hurt by the protests. It would be the right thing to do. Do it, Mark. It could be part of your legacy. $100 million, minority-owned businesses. 5, odd one, Alphabet. The parent of Google did report a better-than-expected quarter, but other than that, the only things that I can point to are maybe the continued success of YouTube and a reinvigorated cloud division under the leadership of Thomas Kurian, who's vowed to catch up to Amazon and Microsoft and won some very big contracts. This guy's a real smart fella. Don't forget, though, Alphabet's got an enormous total addressable market. 6. Oh, yeah, also kids are at home doing schoolwork, and while it used to be forbidden to use Google, but now what are they going to do? I mean, you're at home. They can't tell. 6, tomorrow, one of the world's most famous investors, Ron Barron, is going to be on Squawk, and he's been crowing about Tesla for ages. He might take this $950 stock to $1,000 all by himself. Tesla's got a new plant in Shanghai with another one coming in Germany, and they'll produce as many cars as they can because they can sell every car they produce. Periodically, you hear some worrisome stories about discounting for falling demand. I don't believe them. I'm with Barron on Tesla, presuming he hasn't changed his mind, which I think is highly unlikely. Memo to my Twitter followers, whom I all love, every one of you. Some of you are unhappy. I know that. They think I waited so long, too long, to start pounding the table. I did. I waited 700 points ago. Yeah, you only made 700 points. Sorry. Jimmy Chill says, I love you. Malice toward none. Lincoln. 7th, you want to know what a blowout quarter looks like? I want you to check out the last one from NVIDIA, the chip company. This was the earnings report you would have expected them to deliver maybe in 6 months. Every line item was up except chips for self-driving cars, which are only doing okay. The strength here, well, it's all about speed. CEO Jensen Huang has come up with a new chip architecture that's putting the competition to shame. It's like, it's like horse and buggy, man. All right, anyway, speed, artificial intelligence, inferencing, it's all there, including my dog, who answers to NVIDIA if, of course, you have a piece of steak in your hand. Number 8, PayPal has taken 2020 by storm as the most convenient way to pay for things, whether it be with Honey, the way millennials save on shopping, or Venmo, their peer-to-peer payment app where you can use emojis, or just vanilla PayPal. There's no way to stop this worldwide juggernaut. It's the same as the Apple Pay story. PayPal wins in a world where cash and credit cards are too risky to use. 9th is a bit of a mystery. Intel. I think Intel's got on this list because its stock was cheap and the company has been selling a lot of chips to big Chinese companies worried about being locked out of the American market. Plus, I'm betting Intel benefits from the flood of new money that's coming into the market, which is a polite way of saying it's nothing special. Brutal judgment. But I haven't seen good numbers here. Finally, number 10 in the Nasdaq is Cisco. I have to admit, I didn't see the big upside surprise coming. The quarter was supercharged by WebEx, Cisco's enterprise-oriented alternative to Zoom. Didn't hurt that they got unbelievable execution from Chuck Robbins. Chuck did a great job. All right, so what do we learn from all these stocks leading the Nasdaq higher? I think they tell us that old dogs can pivot to new tricks. Granted, they're not giving you huge gains right now like the down-and-out recovery stocks. Think the bankrupt Hertz surging from 257 to 553 in a single session, even as the balance sheet remains horrendous and the bonds are signaling the common could be worthless. It's not nickel exploding higher like I said it could do last week, even as I did tell you ultimately selling the strength. It's not the cyclical roaring in response to stunning unemployment numbers that show America open for business. It's not any of the airlines or cruise lines or oil companies which get gunned daily. The bottom line, The strength in the Nasdaq's real simple. It's all about FAANG, the power of FAANG and friends, which, as I've been telling you, would be some of the most consistent winners since the market bottomed in March. These high-quality tech stocks are great long-term investments, whereas I think the recovery stocks, everything from Carnival to United to Macy's to Norwegian and Delta, are more like trades that genius millennials, Gen Xers, Zoomers, and even, of course, degenerate gamblers have mastered. Mitch in New York. Mitch.
Thank you for taking my call.
Of course.
MetLife up approximately 18% from their last earnings, closing today at $43 with a dividend yield of 4.3% and its 52-week high of $53.28. Would you recommend purchasing additional shares of the company?
Yeah, I think MetLife's okay. I'm not going to rave about it. Not bad, not great. I think it's an okay company. 4% yield. I don't know. Not bad, not great. I can't rave. Not in this market. I prefer Morgan Stanley at 50. Let's go to Valentin in California. Valentin.
My 11-year-old grandson Valentin loves to invest and has a question.
Sure, 11-year-old, fantastic.
Booyah, Jim. I'm 11 years old, and I've been investing every month for the last year. Summer is here for us kids with the corona still present. I have a stock that I'm thinking of extending my position in because I believe it has a lot of room to grow with products coming out. What do you think of Activision?
Of Activision?
Yeah.
No. I want you to be in Take-Two. I think Take-Two's got more upside because it didn't have that good a quarter last time, and Grand Theft Auto's great. It's got this new NFL product, and it's got NBA 2K. So why don't we do that? 11 years old, it's okay. Pivot and go for Take-Two. I don't have to just agree, but I love 11-year-olds. I mean, that's some of my biggest fan base because you should see it. All those 11-year-olds, and now they're in their 20s, and they're on Robinhood, and they're whamma-jamma trading the Whiting Petroleum, and a Hertz, and everything, the Royal Caribbean, whatever. All right, listen, guys, even though I love Royal Caribbean, and by the way, Mr. Del Rio knows that, and I was going to take a Del Rio cruise. Didn't happen because of COVID. It's all about the power of FAANG and friends. These high-quality names are up huge from the March lows and are solid long-term investors. Oh, man, buddy, tonight, it's the summer of the RV. Even Trump says he's thinking about traveling from D.C. to New York in one. You think he's going Airstream? What do you think? All right, so how is the company like Thor Industries performing as demand increases? Great quarter this morning, so we're going to talk to the CEO. And I'm getting the full employment picture and finding out what could be next in tonight's Off the Charts. And could Sorrento Therapeutics COVID-19 cocktail drive the stock higher? I've got the exclusive, so stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.